Hello everyone and happy Monday, and it's not looking that beautiful. It is looking extremely painful, and this week is going to be incredibly important. So this is kind of a critical tipping point, and I'm going to explain everything in due time. So let's get straight into this. We're saying very sharp decline in Bitcoin, and let's discuss the reasons for it, and then what to expect going forward, and my new $1 million trade as well, because I think that the market is really not in tune with the reality of what is happening. And a lot of people are panicking when in reality, the data is telling us the opposite. So this week is going to be incredibly important for the markets, and I'm going to walk you through the entire whole spiel so that you are not left behind. So yes, we've seen quite a drastic drawdown, 91K down to 85K yet again. Ethereum from $3,000 all the way down to 2,800 yet again. And last time, when we had this nice big correction, I've entered right here quite beautifully, quite spot on, and then I've exited right here, which wasn't the perfect exit, but nonetheless. And this trade alone made me 126K, which is not a bad result if you ask me, and overall we've done quite okay. I'm going to walk you through my trades and everything that I'm doing currently so that you understand and you can also have these kinds of good results together with me. So, and then I'm going to walk you through Evidex and my trades in Bybit and etc. But first, news first. First and foremost, on the 29th of November, which was Saturday, we had China coming out and reaffirming that the central bank actually clarifies the status of crypto assets. But they came out and they said that China's central bank reaffirms its crypto ban and warned that it will intensify its crackdown on stablecoins. So China is not backing down. But as we know, these things can sometimes change quite fast. We were hoping for China because they started stimulating already, which is good news, but so far they still reaffirm their stance on crypto. But this was not the main reason for the drop. Overall, it's not good news, but overall it was not the main reason. The main reason we're going to get to in a second. This is also the reason we can renew this together. But the probability of a rate cut in December, and like literally 9 days from today on the 10th of December, has jumped to 85% probability. And this is the main cause for this slight crash. And again, I'm going to explain my trade in just a second. I'm just walking you through the entire thing here so you understand what the hell is going on. So this is it. This right here. And this has been the fear for a long time. And I told you about this in my previous video. I haven't made a video for quite some time. And this fear is here that Japan's 20-year yield, bond yield surges to its highest level since 98. Just keeps going up and up and up, and it's just accelerating. And it's bad. Why it's bad? As I've said 100 times before, that Japan might start dumping because they're the biggest external long-term U.S. Treasury and bondholder. So if they start dumping U.S. bonds, this could create a repo crisis, and this can create this whole fear of the unwinding of Japanese yen carry trade. That's something, this fear has been there all along, and I kept reminding you about this. And I'm going to get to it in just a second, but this is what I really hope that actually today, Fed Chair Powell will do a speech today at 8 p.m. Eastern time. Well, if you're in Dubai and Europe, it's going to be like 4 a.m. in the morning tonight. So, or in the US, it's going to be tonight at 8 p.m. And quantitative tightening will end today as well. And this is very important. So we have this issue with Japan, and we have Jerome Powell coming out and speaking, and hopefully he's going to say something about Japan and how the US will normally act in response, because it's going to be a big problem for US if Japan will start dumping long-term treasuries to kind of stimulate their own economy and bring the money back to Japan, which can cause a huge problem for the dollar, a huge problem for US treasuries, etc. And this all spills into crypto because crypto is the highest risk asset. So this week, before I unwind the whole thing, and I'm going to show you what it all means, why this week is so big for markets. Well, Monday, which is today, Powell's speech. Quantitative tightening ends today, 1st of December. PMI data comes out, ISM manufacturing. Then on Wednesday, additional PMI and ISM data. Thursday, which is going to be very important, initial jobless claims and U.S. trade deficit. And Friday, the most important day, is going to be PCE inflation data. So pay attention to the forecasts and how it's going to come out, because it's going to dictate what Fed could do next. But most important of this entire video, before I move and discuss my trades and my logic behind my trades, the main takeaway is that the Fed never waits too long, and after the end of quantitative tightening, that's the first point, which is important to understand. There's going to be like a couple of points here. First point is that after the end of quantitative tightening, there's also always a shift towards quantitative easing or other forms of liquidity, typically within 2 to 6 months, sometimes instantly. And I'm going to show you that. It's going to be point number 2. And in some cases, within just a few weeks or even sometimes within a few days. And quantitative tightening almost always ends because the system is already under stress, just like it is now, which means quantitative easing inevitably returns as a stabilization tool. Now, next point is what we could see, what could really trigger a lot of liquidity flowing from Fed and actually us going into quantitative easing, is a repo crisis. And a repo crisis begins if 3 conditions occur simultaneously. Treasury yields spike sharply, for example, 10-year above 5%, 20-30-year ones sudden yield jump. And this could happen if Japan decides to dump US treasuries and therefore lowering the price of those bonds, and therefore the yield is going to be going up. So this is a big problem that could happen now, but good news here, on short term it can be some pain. This is what I can kind of jumping a bit ahead here. But the third and most important point is that if a repo crisis occurs, and it can occur right now because of Japan, quantitative easing is activated almost immediately as a response. Typical time frame, 24 to 72 hours. So I'm not saying it's going to happen now, but all we care about is money printing to go back on and the money printer to finally be turned on. And this could happen very fast. Worst case scenario, within 6 months. Best case scenario, probably a month or 2. And usually this is when we see just incredible performance in terms of price discovery at all-time high prices of all the assets we love so much, especially in the crypto industry. So normally this happens fast. You can pause the video and take a look at the reasons why that happens fast. But this is the most important thing to understand. So considering all of this, yeah, this kind of does, I do understand it does look scary. I do understand that we had this hope on Ethereum that we would kind of go above this support zone, go back above the level of like 3,200 and back into the zone of like 3,800 and kind of chop ahead. That I told you, and I told you before that my expectation is that we have to be moderate in our expectations in general before the money printer comes on. And that's why, same thing with Bitcoin, we kind of were hoping we will clear this area, 95, and then go back into the range of 100 plus with a bunch of our own resistance areas. However, we did dump down. So that's why I had this bigger trade that I've taken from here, like $1.5 million trade, all the way up to here, just not to risk it. I've taken a nice small profit. And that's why right now I have another trade I just opened, the value of which is $1 million. And that's not the only trade I'm running. I also have this trade, which has been posted in our trading club. It's actually an extension. Like, this is the same logic. I'm kind of treating it a bit more actively. And we posted this trade also now inside of our trading club because a lot of this conclusions and a lot of this analysis has been done thanks to AI and even on-chain data and stuff. So also right here on Bybit, I still have this trade running, which another entry point is going to be 2,600 per Ethereum. And same thing on Evadex, because on Evadex I'm using the BitsGap combo bot, which has so far made me 40%, which is quite nice. It just trades up and down, and it just does really an impeccable job when it comes to trading a range. So it just adds to a position, unloads, adds to a position, unloads, adds to a position, unloads, adds to a position on a drawdown, then unloads right here. And then it's been adding to the position here. That's basically what it looks like on Evadex. And short term, it can have some losses, but when it trades in a range, it does quite well. And BitsGap is free for Evadex users. If you want to use Evadex, remember it's a decentralized platform where you can always have full control over your assets because it's based on a blockchain and it's anonymous and transparent and it's cheaper than most centralized exchanges. And there's a link to it in the description of this video to a 10% cashback on trading fees. So you can go and use this to yourself and then go to bitsgap.com and use BitsGap for free because it's a paid service. They have very nice bots. Paid service, but with Evadex, you can use it for absolutely free. If you want to trade on Bybit, you can do so. Then there is other offers. There's also a link to it down in the description of this video. You can see the offer on the screen. Real nice stuff. So you can go and check this out. So my concept here and my idea here is that while this all plows, like, I hope that Chair Powell is going to say something today. Probably he will not, as usual, because they always do things at the end of at the most critical point, and Jerome Powell's term is ending in May of next year, so it's kind of colliding and coming together with the kind of latest point where we can expect quantitative easing. So until then we need to survive, but hopefully it's going to happen faster so that they will kind of reply and kind of prepare for this Japanese situation to unwind. So for me, I'm ready to add to my positions. So in case if we do correct a bit deeper, 2600 is an important level on Ethereum, and then my stop loss would be like 2400 just in case, because if we go into bear market or whatever, I just want to be protected. So and same thing on Bitcoin. 78,000 really is a level where I would be super interested in Bitcoin, and then with a stop loss of like 70k, because the price is going to be below MicroStrategy's entry price, and then I don't know, I would not be interested in risking it. So what I want to see, maybe some kind of touch here, some kind of consolidation, money printing, and then finally we take off. And then all the people who leave here will just be left behind. But that's just my point. That's how I see the things. Let me know that in the comments what you guys think. I'm interested in your analysis as well. And all the bonuses and stuff in the description of this video. And you can check out also this quick tutorial popping up on your screen where you can see how to trade properly. And it's beginners/intermediate trading course. So go check it out. And I wish you an amazing week. We'll keep you posted. Ciao.